Hi, good evening. Today is Monday, June 28th. We got another record close on S&P 500 as well as NASDAQ. What was unusual about this day is the divergence between S&P NASDAQ and which were both up and made new highs, and Dow Jones and Russell indices, which were both down for the day. So that's a bit unusual. And NASDAQ not only had an update, had a very large update, almost over 1%. So S&P 500 has been running and making new all-time highs for the last couple of days. At the same time, the breadth has been deteriorating even for a few months. As Bloomberg noted, it has been slowly waning since April. And the last couple of new all-time highs came with less than half of the all stocks in S&P 500 being above 50-day moving average. On Thursday, when S&P made new all-time highs, only 48% of stocks in the S&P 500 were above the 50-day moving average. And today it's the same story, less than 50% in the uptrend. So it's interesting how the market is resilient in the way of all of the negative macro and disappointing macro news last week, as well as deteriorating breadth. So we'll see if that can continue. We had 150 points, over 150 points rally since Monday last week, pretty much with no pullback. So that's a significant rally. And but again, as long as the market is keep moving up, it's a bull market, right? And the volt trigger right now, it's about 42.35 level. And my levels are the same. As long as the market is above 42.40, 42.50, it's still pretty bullish. And this week is kind of pre-4th of July holiday week. So I'm not sure if we're going to see the fireworks, bad pun intended, this week or not, but it seems that
Well, where I would say there was definitely some fireworks, and not even getting into crypto yet, was in the biotech space, specifically a stock called NTLA, which was up 50% today, and they announced very positive. Let me get this off here, but this one was up over 50% today. Now, after they announced very positive clinical trial results on a gene therapy for sickle cell anemia, and there are some other companies, or sorry, this was for the transthyretin liver disease, and so this was they also have a sickle cell program, but this is the one that they announced today, and so so this was up over 50%. One of the companies that's hurt by this, by them having, and this is sort of, it would be a one-time treatment, and it would cure the patient of this disease. There wouldn't need to be an ongoing treatment. It might be very expensive to get that one treatment, but you wouldn't have to be on what's essentially an enzyme therapy the rest of your life. But Pfizer has a product in this space that's a small portion of its overall revenue, so it's not really hurt by it so much. But the company ALNY Pharmaceuticals was really hurt by that today. I think it was down 10-15% if we can get that one. So big punch today, because that's their main product, is a product in this space. But what we had as a result is really nice rallies across the board in biotech as a result of that news, like CRISPR up 6%. So that's a related stock. Editas, all of these rallied really sharply today, all gapped up and held most of their gains. So Editas up 5%, and that's up a little bit after hours. But then, like some of even things like Also the ARK Innovation Fund, which holds a lot of these, holds some CRISPR, holds some of these other stocks. It was up over 130 today, which I think it's getting a little extended now myself. But that's it's been an amazing rally from roughly 95 over the last several weeks, or the last month, up to 130. And it may be a bit extended if you look at the daily chart. It's just it's had such a nice rally. It's hard to imagine this would continue, one set of gap ups after another, once you cross that 200-day moving average. But the I don't know how much it's been an amazing month for biotech, a very positive month, but some of these may be a little bit extended as well. But that's what I think we're seeing in the it's positive news. So it's hard to turn away from or hard to just regard it as just a technical move or a bounce.
Well, as Victor would have said, today was a woke day again. Lots of woke news. For example, Giuliani's law license has been suspended. And, well, one would say that it kind of sends not necessarily a good message to all lawyers. You better be on the winning side of political aisle, not necessarily of reality, but, you know, the world we live in.
Right. It's a pretty and I would say that just some of the what's been happening recently is there was primary elections this last week in New York, and the more, I'd say, tough on crime candidates were the ones that won the primary, like Eric Adams and Curtis Sliwa, who is the founder of the Guardian Angels. And but it was the two most tough on crime candidates that were even running. And so it's not to say that they'll actually, that Eric Adams or whoever would actually be tough on crime, but it might be a little bit of a change, which but it may get worse before it gets better, would be my thinking, having lived in the city for a while. But I think that there was a really nice article, and let me see if I can get this up. A really nice article by Miles Uland in Yahoo Finance on the change, the increasing change in sentiment regarding inflation, and how even the Fed is no longer using this benign language when it comes to inflation expectations, and that Alan Greenspan had always used the term quiescent to describe prices or period of stable prices, that we don't really need to worry because prices are quiescent across the board. But they're no longer using this type of terminology or this positive terminology. So the Fed watchers are looking at this language, that they're acknowledging that there's been a shift in inflation expectations. Now, whether that is something that just persists the rest of this year or next year, or whether that's a longer term issue, well, that's, I think, an open question. But there's been a shift here, a big change from the past 30 years in terms of 35 years in terms of how even the Fed is talking about inflation. So it's I think that's combined with a weakening breadth, and where increasingly we see stocks struggling to rally broadly, it could be a bearish setup for the longer term.
Right. But, in other woke news today, the Supreme Court refuses to hear the transgender bathroom case, which is a victory for LGBTQ. Meanwhile, Facebook lawsuit was Facebook won, and the antitrust lawsuit was dismissed. So it doesn't look like the government is can't even file their own lawsuit with all of the army of lawyers there, one would think. And on top of this, was interesting, NFL has released a powerful video on Monday, which features the message, "Football is gay." And the clip, which is 30 seconds long, is basically saying football is gay, football is lesbian, football is beautiful, football is queer, football is transgender, football is bisexual, etc., etc. So it's like they're pretty much naming all the genders. And here I thought football is about playing ball, it's about sports, it's about throwing and catching the ball, not trying to figure out if you have them, but we have hijacked basic sports entertainment and turned into politics. People just
Well, and
want to
then
watch the game.
At the Olympics, the U.S. I forget the runner.
I think it was some heavyweight hammer thrower or something.
Right. Well, and actually, the supposedly world record holder, U.S. Athlete, came in third, won a bronze medal, and was while the other two athletes that won, first and second place, were just standing respectfully for the U.S. national anthem. This U.S. Athlete wouldn't, and was just looking the other way, and so on. So it's all these sports have just been politicized,
right,
to the point where it's not really about the sports anymore. It's about
right. Right. She said that she felt set up. I'm like, did you not know this is what they do at Olympics? Nothing has changed for decades, literally. This is what they do. They play an anthem of the country you represent. And if you didn't want to represent the country, then you shouldn't have been there. Like, how come is this set up? And so,
Right. It's really like, who sponsored you? I mean, was it? It wasn't the some.
The whole point of Olympics was to be proud of the country you represent. It's not about you individual. You're playing under the banner of this country. You're being sponsored by this country. So how are you now surprised that this country is being celebrated if you win representing it? Nothing makes sense anymore, but here we are.
Right. It's a very what I guess strikes me is the sense that these types of things like the Olympics, these moments where they're sort of supposed to be these made for TV moments where, well, we can come together, we can all acknowledge one another's achievements in different countries and things like this. And when someone is kind of going against that grain of trying to find some common ground, either internationally or just within the country, then it makes me think that, I mean, just we've already seen viewership decline hugely in professional sports.
Right.
Like, what are they thinking? Do they want this to decline by another 50-60%, and where it just won't come back? People will decide, well, I'd rather watch a high school game in my neighborhood. I can walk down to the high school, watch a game there, and there's nobody doing any of this stuff, and it's a pretty good game. So that's I think there's there's a sentiment against it. Won't be expressed by people raising their fists or marching or anything like that, but they just won't buy the products, or they won't watch the show.
Right. Exactly. Right. Meanwhile, another fireworks were on crypto this weekend, where Ethereum had its second best day of 2021.
Right. It was a really strong rally. And let me see if I can get, so here we go. The Bitcoin is kind of right below what I consider to be an important level, which is about the 36,000 level. It did rally really nicely. And if you, at least in something like Ethereum, so maybe not in Bitcoin, but in Ethereum, we had, it was sort of this, where it plunged below the 200-day moving average, and it's rallied again right back up to a level where, you know, if it can push through, then it's sort of bullish in the near term. Right, it's that level I think is right at about 2160 for Ethereum, and it's right now just below 2100, and Bitcoin at 34,400 roughly, and so if it can punch up through 36,000, then that would be pretty bullish in the near term. But it's right below these levels. It's not to say it can't take a few days to try to punch through this, but it's definitely the sentiment has changed. I think it's yet to be seen whether or not this is just a relief rally in an ongoing bear market, but it was a really nice rally today. And generally, when you have these strongest rally in a year or something like that, I mean, that's often not a bullish thing. It's often in a bear market that you have the strongest rallies because it's short covering combined with relief rally. So
right, like you said, the sentiment seems changed because, for example, the negative news are no longer negative. The Binance, one of the world's largest cryptocurrency exchanges, was just banned Sunday by in UK to do any regulated activities, whatever that means. I guess they can't really operate in UK. So, but that didn't really affect anything because I think people see that there are other exchanges. And in Coinbase, for example, Germany actually gave them the license to operate prop trading and to be a custodian. And so I guess maybe they cancel each other out.
Right. Well, I think Coinbase, though, was actually much stronger than the rest of the crypto market over the last few weeks. And even as Bitcoin was plunging and actually going below its previous low, and Ethereum right at that level, either depending on which exchange you look at, either at its previous low or just a little below. Coinbase had held its lows and was doing a little bit better.
Right.
And so it never went back to its previous low in the first part of the crash. And so I've been watching that as kind of a leading indicator because I think a lot of institutions they may not have the charter or the mandate to invest directly in crypto, but they will be able to buy and trade something like Coinbase, and it as a proxy for it. And there are others too that, but it's, a few of them are going to be as liquid as Coinbase given its the size of the market cap and the size of the firm. So I think that's but I would say that the thing that maybe makes me pretty bullish is that it's actually been kind of a narrow rally so far. It's been Bitcoin, Ethereum, and to some degree, some things like some of the platform coins like Cardano and Polkadot. They've rallied. Polkadot hasn't really rallied that much, but so it's been fairly narrow. And some of the DeFi tokens like a Yearn, for example, it looks a lot like the Polkadot chart, kind of a broken chart where it hasn't really rallied convincingly in a way that, say, Ethereum has, where it's back above that level of 2000, which is maybe psychological level, but I think the more important levels are back up here. But then there's some like down here, you could look at the meme ones, like a Doge coin, where maybe it bounced off its low, but it looks similar to some of these others where it's just not rallying as strongly as, say, Ethereum. It was actually off a little bit today. And so that to me is actually a bullish sign. That is not it's more consistent with, okay, so maybe the bear market is starting to end or alleviate a little bit. But it's just going to be the strongest ones that are rallying right now, leading the way out. And so that to me is not that it's pretty, it's possibly bullish, cautiously bullish.
Right. Well, some Mexican billionaire was chiming in today about Bitcoin, saying that it's a good investment. You know, I'm always skeptical when billionaires talk something up. You know, like really.
Right.
So you're gonna share with us your secrets? Sounds good.
Right. They didn't tell you when they bought or
Right.
sold, right? They told you after, or after they took their position. That's when they tell you, And
Right.
but it's yeah, I think that there could be a number of other countries in Latin America that do something like what El Salvador is doing, where the president of El Salvador just announced that every El Salvadoran, and there aren't that many of them, it's like, I don't know, 4 or 5 million people in the country, but every El Salvadoran will get $30 worth of Bitcoin, and they'll have a wallet that's made for them. They just need to claim it. And so they're actually, it's not just trying to be this kind of tax haven kind of, people relocating their citizenship there and things like that. It's actually trying to get some adoption by ordinary people there. So we'll see if it works out, but it's interesting to watch that transpire.
Right. I would guess that the rest of the countries, if at least this is what I would do, I wouldn't jump in right now. I would just wait and see what happens. Why take the risk? You could see what happens in 2-3 months, half a year, and see if it's successful or not. But
yeah, I'd say okay, so at a price like 34 or 422 or whatever, wherever it'll be today, I think that it's still close to 50% off its high. It's rallied a bit. I think it depends on how you're positioned. If you've already got a position, I would call it more of a hold type market. I've got the position. I'm not selling. I don't view this as a good place to sell.
right.
But if you don't have a position yet, the best thing I would suggest is to think about dollar cost averaging a little bit here and there, and not seeing it as this is a great time to jump in. It's still a little treacherous, I think. And so I would say over a dollar cost average in, you might space it into 6 or 8 investments over, let's say, a 4 or 6 week period, and that might be a good way to get a good price and not have as much risk, because I think the real risk is that it's positive, but that this rally doesn't continue, and then this was just a moment of enthusiasm before it plunges to new lows. It could happen, and I'm not writing that off. I would, but I think it's maybe less likely than it was a few weeks ago, and as we saw. But I think it's less likely for that to happen a few weeks ago, when the news flow was much more negative, and it looked like everything was negative and happening at once. And further, that Bitcoin conference in Miami there was, other than the El Salvador news, there wasn't like any other catalyst for bullishness there. And that was sort of a goofy conference with some of the people getting on stage, and so I think that it might have had maybe not more negative than positive. It just didn't have any. It wasn't as positive a catalyst as some people had expected. Definitely.
Right. Is there any update on the Ethereum conversion from proof of work to proof of stake? Because it seems like the deadline kept being moved in perpetuity. Is that finally happening?
Oh, it's going to happen by, well, officially by Q1 of next year. It will definitely happen. But most likely it will happen late in Q4 of this year. That's not the most immediate catalyst for Ethereum, though. The most immediate one is what's called EIP, which stands for Ethereum Improvement Protocol. And so there are BIPs, they're for Bitcoin, EIPs for Ethereum, but EIP 1559. And what that will do is put more, because whenever you run something on, if you send Bitcoin or if you run a smart contract on Ethereum, you have to pay for the transaction. The more complicated the transaction, the more you pay. And so what the problem was is that with some of the contracts on Ethereum being very complicated, especially as what it's called gas prices went up, there would be a lot of uncertainty as to how much you'd actually have to pay to do a transaction. And what this EIP 1559 does is it will put more, it'll sort of fix the price of gas, and so there will be a lot more certainty about what you actually pay. So that is it's kept adoption from happening to some degree. Now there's some people who say, well, this will actually result in a burn of Ethereum, it'll become deflationary, and that's possible, but that's not the real benefit of this. The real benefit is that it will put more certainty around the price of a transaction, and so that's very bullish in the near term. It took a lot of wrangling within between developers and miners and so on to get agreement on this, but they got agreement, and it's going to be happening in July, early July, most likely. And so I think that's some of where Ethereum versus Bitcoin, Ethereum Bitcoin ratio has really popped up here over the last few days. And I think that's part of the reason why is this was viewed as something that just like proof of stake conversion or merge, as they call it, where there's this I don't want to say FUD, but there's this doubt that it's actually going to happen. And so that's hanging over the market. But then when it becomes clear that barriers are getting lifted for that, that's when there's the rally, because it may sell off when it actually happens. But right now it's okay, it actually is going to happen. It's not just a pipe dream. So that's what I think is happening here over the last 3-4 days with Ethereum.
So my understanding is that there's 21 million of Bitcoin. So the number of Bitcoin is limited, but the number of Ethereum is not. So can they just devalue and create as much Ethereum or can they manipulate the price, deciding of how much they mine? Is the mining?
Well, what's the think about it this? Okay, so the in the end, there is a practical upper limit for Ethereum, for Ether. There's not in the same way that there is for Bitcoin, where it's fixed in the code and it can't be changed. Well, it could be changed. I mean, if the miners agreed on it, it could be changed too. But it's very unlikely, because that would damage one of the propositions for investing in Bitcoin. That is the strict upper limit, right? It's the same thing that for Ethereum, that there may not be a hard-coded upper limit, and it would be difficult to do because of the nature of these how rewards are paid out to miners and then eventually stakers. But with EIP 1559, it would be as the level of transactions increases, it's very likely that this will be that the growth will be flat, or or growing at the same or even a slower pace as Bitcoin. But there's a huge interest in keeping the value up and not devaluing it. and that's security. That if the price of, so there's the main risk in any cryptocurrency is what's called a Sybil attack, or a 51% attack, where you can basically get a majority of the hash power, or it could be stake power, and you could do a double spend. So you could basically print money, and there's not a consensus to disagree with you and to say that this is not a valid transaction. You're the majority, and you can say that it's a valid transaction when it's not. And but in order to prevent that, you have to make it really expensive. And so that's why the price, there's an interest in all of the stakeholders. It's all of this in all of the stakeholders' interests, even if they disagree on some things, like the miners versus developers versus users. They all agree that the higher the price, the more secure the network. And so this is why, although one of the knocks or the negatives that is often stated on cryptocurrency is that, well, you can just create your own cryptocurrency, and there could be 12,000 of them, and how do you why doesn't that not just devalue everything when something new comes out? And the answer is that, well, there's only so many users, and that can maintain the value of a coin to that there can only be there's a finite number of users, and so there's just a small number of coins that will ever acquire the value needed to keep it secure, and all the rest will be insecure. And so even an example of that is the fork of Ethereum called Ethereum Classic. It's had a 51% attack twice in the last 2 years, because there just wasn't enough hash power and users to keep that from happening. Hugely embarrassing, and it was negative for this, and it hit the value of that coin. But it just shows that it's not viable when that happens. It's not a viable project.
I think it happened to Bitcoin once, though. The 51.
Not a 51% attack. There was a bug in the code, and I want to say that was like 2011.
Right.
And that someone was able to create like 200 quadrillion Bitcoin or something, and they went back and they fixed the code, and that went away. But it was like a overflow error in the code or something that they were able to do that. But that there was a similar issue with Ethereum, where someone hacked the Ethereum Decentralized Autonomous Organization, or DAO, and they stole a bunch of Ether, like over 1 million Ether. At the time, it was only like $20 per Ether, and but still, it's $20 million. And so there was a consensus on the part of the miners to undo that, or to invalidate that transaction. And that's what resulted in the fork of Ethereum Classic and Ethereum. And it was, I would say, it wasn't really controversial in the Ethereum community, but it was definitely controversial in the crypto world in general, especially in the Bitcoin community. It was viewed as, well, this is not immutable and so on, when there's different perspectives on that. I just say it wasn't like, that's a consensus view. It was definitely a view in Bitcoin community. But I think that there haven't been other things like that happen in Bitcoin or Ethereum since then. And that was when Ethereum was still less than a year old. It was just getting off the ground. And to have the majority holder be an adverse entity that hacked the coin, or hacked the DAO, was viewed as being it would be the end of it. I mean, it wouldn't survive if that were the case. But the DAO is no more. The DAO ceased to exist after that. It was just, people got their ether back or whatever. And so there's never been a DAO since then. There are a lot of little DAOs now, like for different projects that are on Ethereum, but not an Ethereum DAO. But but I'd say that that's why the price, if the price can't be held at a reasonably high level, which, I mean, it's nowhere near, I mean, it could be a lot lower than 2093 to still be secure. It's probably secure at 100 or 200. But the higher it is, the better, the more secure it is, because it would be that much more expensive to try to hack it. And so Bitcoin or Ether so far out of reach of being able to anyone conduct that kind of attack. But then either same with some of the the smaller ones. All the top 10 or top 20 are pretty secure. They're very secure, I would say. The ones lower than that, it gets questionable.
Is the Dogecoin secure? I mean, Dogecoin secure? Because,
well, if you look at the where the hash power is coming from, it's just a handful of miners, really. I mean, how many people are mining Dogecoin now? I mean, most of the people that are trading it, they buy it on exchange, and they're not mining it, and it can still be mined. You could be a Dogecoin miner, and it's probably profitable at 25 cents a Dogecoin. It might be profitable, but the price being higher, it's a better situation than it was. It's actually a top. It's in the top 10. It's in probably the top 7
by market value.
In market cap, yeah, because of there's something like 100 trillion or something Dogecoins, and so that it puts it at a good like over 100 billion valuation even at this level. But so it's probably secure at this point, but when it was smaller, like lower than 1 cent, it probably was subject to that type of attack. But because it was just done for fun, why would anybody want to hack it? Now there would be interested in people interested in hacking it if they could. But something like all these ones that are on Ethereum, the value is secured by the Ethereum network, by Ethereum itself. And so they don't have to worry about this. They could be really, really small, and they're not going to be subject to that type of hack. But something like a true platform coin, like this Bitcoin Cash or something like that, that's maybe the number 10 coin, or Bitcoin SV. Yeah, these are forks of Bitcoin. Some of these are probably like Bitcoin SV might be subject to that type of attack if there are too few miners that are controlling the majority of the hash power. So that's the risk, but it's also a risk for proof of stake. It doesn't go away when you convert to proof of stake. It's just where's the how many is there a holder or a group of holders that constitutes 51%, and that's in fact the knock on coins like EOS, which is proof of stake, but it's what's called delegated proof of stake, which there are only 21 validators of this coin. And so those 21 are sort of handpicked by the team that built EOS. So are they there's incentives for them to keep the value up and so on, but are they is it kind of like just a small club that's going to keep this group of validators small and keep it, everybody knows one another and that sort of thing. And so it's a lot more centralized than something like Ethereum would be under proof of stake, where there could be millions of validators, and it's not going to be a tight group of 21. Binance Coin is, even though it's something like the number 3 or 4, it's similar. There's 21 validators, and every single one of them is Binance itself. So the whole thing is controlled by Binance. It's not decentralized in the slightest. And so from my standpoint, centralized finance, the upside is, that there's not going to be, if there's a hack of your bank or something like that, you'll still have your money, right? You're not going to lose any money. It's they'd be so embarrassed that they put the money there themselves to prevent there from being a PR disaster. But in decentralized finance or in crypto, you have to manage your keys. You're taking some of the risk that a bank would take.
Speaking of the risks, it's one of the recent risks I've read about over the weekend that apparently some big holder of Bitcoin died over the weekend or recently and took a whole bunch of Bitcoins down with them. And there are lots of stories like this. If you lose your keys, you're kind of screwed, and your heirs, it's not the only story I've heard that many people.
Oh, it's a very common fear. I mean, on the part of people that, and I would strongly suggest making a plan for your family or heirs or whoever, or your lawyer, somebody who can be trusted. The old saying is, not your keys, or don't tell anyone your keys. While I agree with that, how can anyone access your assets if they don't have it or can't know what it is in some way? And if you have a agreement with a lawyer that's a legal agreement, and you sign, they sign, you sign, and your heirs have a copy of that, and your attorney is keeping it in a vault somewhere, then that may be, it might be a little bit more expensive, but it's probably a really good option, because then nobody's going to be able to access it ahead of time. But when it comes time to settling your estate, then that could be brought forward.
But wouldn't that cause eventually Bitcoin number of coins converge on zero? I mean, close to it eventually. It seems like coins are being lost. A lot of them being lost constantly and continuously. So there's a few and fewer coins in circulation. It's just a matter of time. Either they have to increase the supply or keep dividing it by a larger number or something.
Well, it's and so there are people that are Bitcoin, some of the Bitcoin, and I consider myself a Bitcoin person, by the way, but I mean the people that are more of the Bitcoin maximalists, maybe would be how I'd put it, that they would even say that's a good thing. That's a feature, not a bug, that it's deflationary because people are always losing some, and it's never going to get, imagine a couch that you can never get the coins out of the couch cushions or whatever. It just is this sink that money goes into, it doesn't come out. But I don't know. I think there's really no way to work around that and keep the integrity of the cryptocurrency. That what will happen down the line, though, is, and we're already seeing it, is where there's still there's wallets that are trustless, but they have they still have the secure, or they're trustless. They still have the security, but there's like social validation or some other way to recover your password if you lose it. And that's always the risk. Like people would say, well, just get a hardware wallet. Well, you're going to lose a hardware wallet. What happens then? You might be able to recover it depending on what you've done to back it up, but you might not be able to. It might be lost. And so hardware wallet is one solution, but you can lose it. Paper wallet, it's not secure. You got to store the key somewhere. And so but that's the thing, that if you're the advantage is that you really do control these assets. Nobody can take these assets away from you for whatever reason. There could be, you lose in court and you have to pay, and you don't want to pay. I mean, I'm not saying don't do what a court says, but still, it's they can't just seize your assets like they could a bank account. You would have to do the transaction. So that's maybe the advantage. You really do control these assets. On the other hand, the downside is that, okay, so when you have these cryptocurrencies like an EOS or Binance, where they have some of the nice features of like Ethereum, but they don't have the same security, and they don't have the same decentralization. And people use them because they're cheaper, but they that it doesn't have any of the decentralization benefits.
Right. Right. Well, thank you. I mean, because I have an IT background, and I still have hard time sometimes wrapping my head around some imaginary coins that people are trading on the internet with imaginary wallets. I don't mean it in a negative sense. I just mean it in the sense that it's very hard for many people to comprehend something that you just cannot physically hold or see. And somewhere in the ethers on some sort of blockchain. So, just purely from use point, that's a negative for all crypto, because people want to see it more actually. So that's why I think the experiment of giving people in Ecuador $30 per month and a wallet and everything, this is going to be a great experiment, and we will see how it works out and what happens, whether people take to it or not. It's a perfect real life experiment. So I'm really excited to see how that works out. It's very interesting.
Well, the thing about about cryptocurrency is that, especially on a platform like Ethereum, but it could be done on Bitcoin as well. Some of it's being done on Bitcoin. Is that there can be all sorts of monetary experiments that get conducted, and there's very little cost to do it, and you can get people to actually participate, and you can see what works and what doesn't work.
Yeah, absolutely.
And it might be a very low risk situation. So some of these decentralized finance projects, whether it's on Ethereum or some competitor, some of them are really kind of dumb ideas, and you got some with silly names and so on, Bunny Swap or Pancake Swap or whatever. But on the other hand, there have been some really interesting ideas, like, for example, there's a platform called Alchemex or Alchemex, and the idea is you can deposit it, all lending in decentralized finance is collateralized. So you make a deposit, and then you can borrow up to 50% against your deposit of stable coins. But what's interesting is that whatever your deposit is, it's invested in like a hedge fund type situation where they're yield farming with your money, and the loan that you got will pay itself off within 5 years. So imagine going to a bank, and the bank, you have to put down collateral, like when you get a mortgage, your collateral is your house, but that the bank tells you, well, you don't have to make any payments. The loan will pay itself off in 5 years. I mean, that's a pretty interesting idea. I'm not saying that that could replace
Well,
the whole
to me,
financial
it
system.
sounds like a too good to be true idea. But you know, I'm a cynic. I'm a skeptic, and so you know, what the bank is not secured. What happens if your value of collateral drops? So all of those things.
Well, it could it's all stable coin collateral. So if you think that the stable coins itself won't be stable coined, then and hold the value of a dollar, then it could be, then you could lose that. But
Right.
the
So this is the contradiction in crypto from my perspective. It's supposed to be a trustless system, but you have to
right,
trust that your stable coin is going to be stable, that whoever is behind the stable coin, which is a monopoly in a sense, that they are actually having $1 for each stable coin. And most of these things are in Cayman Island, not audited. And I know you said there are some exceptions who are more stable than others, or more audited than others. But Binance, I think it's in Cayman Islands, and there is no audit, or rather, there is no unbiased audit. I mean, they audit themselves, kind of thing.
right, right, and
And
then the only thing keeping them from screwing people over is you have to maintain a good reputation to have customers, right?
well,
That's the
yeah,
only thing really that's keeping them
right.
from taking people's money. But there are different stable coins, and I actually, the one that I like the best is called USD coin, US dollar coin. I probably use it more than anything else, and it's completely centralized, admittedly, and I don't have a problem with that because it's like, well, how are you really going to have a true stable coin unless there's
Well, US dollar. Didn't one of the Fed speakers, if
right.
I'm not mistaken, just said that they want to make US dollar as a stable coin? So that could be a competition. If you could just use your actual US dollar as a stable coin and send it across Ethereum network and other networks, then this is going to be the winner. And because it is US dollar.
Well, that's fine. I would say that most likely the the Fed is looking into it. That they're very aware of, let's say, U.S. dollar coin and some of these others, and they're kind of fascinated by them. They're very interested in doing something. At the same time, they some people at the Fed that I've whatever talked with. It's been a few years since I talked with anybody there, but they see it as a potential. It could threaten the stability of the system. They're worried about that, but then they also kind of like watching these experiments play out, and that it's people with risk capital that are spilling it around, and it's a little bit like things like some of these binary markets where people can trade basically binary options on different events and things like that, and those have been around for a while, and they're regulated by the CFTC, and it's not a huge market. There's maybe a few, like $100 million in that whole space, but the the federal government's not shutting them down, even though it's basically betting, online betting, right?
Right.
But I think that so some of these are just experiments like that. ALKK, they it's not a huge project. Not everybody. Well, and the reason is that you have to put down 2 times what you're borrowing. So it's like, why are you, if you have the money, why do you need a loan, right? But the idea is that in decentralized finances, that what's called composability, that like similar to no, I'm not going to pronounce this exactly right, but matryoshka, like the nesting dolls.
Mm-hmm.
Uh,
Yep.
uh,
Pretty good.
Yeah, okay. That the that 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 you can nest these investments within one another. So
Mhm.
you might have stable coin, and then you put it into Curve, and then you take this into a liquidity pool on Curve, and then you take the liquidity pool tokens and you deposit them over here, and you get a little bit additional yield, and then you deposit that over here. And so that's what some of what people are doing is they are depositing, they get the loan, but then they're able to use this borrowed money in whatever alchemics US dollars and deposit them into a liquidity pool, get a little bit like 2% more yield or something. And so it's a lot of financial engineering that's going on. And it does take someone who's pretty sophisticated. It's not for just passive people that are sort of passively put their money in a money market and don't want to worry about it. It's for people who are either kind of cutting edge and they're wanting to really try these things out, or they might really be like yield yields, scrambling for a yield. But there's less of that. There's a little bit of that, but it's more of people that are either they're very early adopters, or they are like there's like people that run hedge funds and so on that are invested in some of this, who see it as a place where they want to invest. And then, but it's generally pretty sophisticated investors. And I think what I've talked about, things like Dharma, these different wallets that simplify a lot of this, where you don't have to.
But then again, you're moving trust from the trustless Bitcoin system to a wallet, who you now have to trust that it's free of bugs or etc.
Well, that's the thing about Dharma, is that you are able to. There is KYC you have to go through, like with if you open a bank account. It's more than what you have to go through when you open a bank account. You have to show your ID, your passport, all this stuff, and then you can open a wallet on Dharma. But what you can do once you go through that is you can deposit money from your regular bank account in dollars, and then you can turn those dollars into the crypto equivalent, US dollar coin or something, and then you can use them on these different DeFi platforms. And it takes all of the, like, go to this site, click this thing, figuring it all out. It makes it much simpler, and like you can just sort your opportunities. Like here's one, 11%, 9%, whatever, and you can click on the one that you find attractive, and then it will put the money in there for you. And while gas prices right now are pretty low, I want to say it's not sure exactly what it is, but it's been below 20 gwei. So some of these transactions that might have cost like $50 a few months ago,
right,
they're now $3 or $4. So it's the gas prices have come way down. So that now is a good time to open a Dharma wallet, or to try to play with some of these things, and do it with you can do it with $100 and see if it's something interesting.
Yeah, interesting. Thank you. Meanwhile, just a quick digression before we go about vaccines. There has been this Delta variant that has been going around, and it seems to be gaining steam, and lots of countries are beginning to get very concerned about it. And some countries are thinking about blocking flights and travel from UK, because they have lots of travelers from India, etc. And it's been so long, and we're still worried about that. And to me, it seems like it's never going to end. For example, in Israel, where the vast majority of people are vaccinated anyway, the fully vaccinated people got the Delta coronavirus. And basically, half of the adults who got the Delta virus were vaccinated with Pfizer. So that just kind of, to me, diminishes the credibility of vaccine. If this data is true, this is what I saw, that half of people are still vaccinated, and half of them are still vaccinated and still get the Delta variant. So
right.
What does it tell you about the vaccine science? And that on the flip side of that, another article that I saw, granted it's questionable, but still nonetheless, according to that article written by multiple doctors from Poland, Netherlands, and Germany, etc., it says that for every 3 deaths prevented by the vaccine, 2 are actually inflicted by the vaccine. So my point is this: whether this article true or not, this is the kind of study we need to be doing, where we actually compare the risk of dying from the vaccine plus the cost of the side effects from the vaccine, because that's just the deaths they're talking about. For every 3 lives saved, 2 are dead from the vaccine. Whether it's true or not, we simply don't know, because the studies like this need to be done more. But instead, we're talking about the relative risk versus absolute risk. Nobody is looking at that. They're just presenting the better data that's better for the consumer versus the actual true risk of dying versus from the vaccine versus the virus. So
how about that? Simply giving people information and letting them make a decision for themselves, right? I mean, it would be that's something we haven't been trying, right?
Yeah. Instead, all the information is being filtered out and blocked via Facebook, Twitter, and Google's and all other stuff, where you just cannot even get this information. And like the ivermectin, that's not a drug that people claim that it is effective, but because it's not patented anymore, it's kind of free, and nobody wants to do the study. And the drug itself got caught in the controversy of Trump, anti-Trump. The science has been tainted so badly by politics, as opposed to just being pure science. It's really sad to watch.
It's clearly happened, and this issue of what the origin, whether it leaked from a lab or not, and it's become evident that some of that information that was either suppressed or deleted without even the scientists knowing that was being deleted. And so, like, why, how can this happen? And why can't something just be discussed openly? And it was, they were evidently afraid that, well, this might help Trump, or this might help, this or that politician. And it's kind of, why not tell the truth and let the chips fall where they may, and even though it may not.
Now, even in the post-Trump world, we still can't get any truth, because now they're so invested into their lies that nobody wants to tell the truth. And so it reminds me of Politburo in the former Soviet Union, where they keep lying and lying until it collapses on itself. Now they just said that the new study showed that the vaccine is effective against coronavirus for much longer time, many, many years. I'm like, okay, how do they know that? The years haven't passed yet. And so you read those articles. In one article, it says that, and another one, it says that the Delta variant affected half the people who had the vaccine. So which one is true? And
right, it's or maybe they, in a way, it's like they can both be true, but it's like depending on how you're defining your terms and so on, and none of that's really being done properly either. So it's there's just so much disinformation. It's hard to know what to trust.
Yeah, trust the science. Depending which political party tells you the story, then you trust that scientist. First, you ask his credentials, are you Republican or Democrat? And then based on your political belief, you either trust or distrust that scientist.
Right. Oh, yeah. And it's exactly, and that's a very dangerous thing, because I actually don't think that sometimes the two parties are closer than people think, and they're not as far apart as people think, and it's.
I agree, and exactly to this point, Victor was tweeting, why did the Republicans agree to that infrastructure bill? Because, and my point was, what I told them is that what I think is that the game is rigged. There is really no difference between the parties anymore. The only difference is which lobbying and lobbyists they serve in Washington, D.C. Neither party cares about the people, pretty much. Sure, there are exceptions, but by and large, they really don't care. They only care about their own pork special interest and lobbyists.
Right, and they were standing there with Biden because they want their slice, right? I mean, they want the slice for their state or whatever, and so it's there's not that as much difference as people think sometimes, and it's it would be nice if there were more separation between them, but there's less than I think some people think.
Yep. Well, on this sad note, thank you, Andy, for
explaining everyone
crypto to me and to our viewers, and we'll see you back on Wednesday.